Alright, let me be real with you. Most traders lose because they are chasing patterns that don't actually move the market. You see a perfect breakout forming, you buy, you are feeling like you are genius, and 2 minutes later, boom, stopped out. Feels like the market is trolling you, right? Well, it kinda is. Before I share the secret of why this happens, do me a favor. Hit that subscribe button and turn on the notifications because I promise you won't find this stuff in your average trading book. So here is the truth. Markets don't move because of patterns. They move because of liquidity hunts. Now quick teaching moment. What is liquidity? It is basically the fuel that makes the market move. Big institutions need buyers when they sell, and they need sellers when they buy. But here is the problem. They cannot just click buy or sell like we do, because they would send the price flying. So what do? They engineer liquidity. They push price into areas where stop losses and pending orders are clustered, and that gives them the volume they need to get filled. That's why those false breakouts you keep complaining about aren't false at all. They are designed stop hunts. That is the real move. So instead of asking, is this a breakout? Start asking, where are the stops? Where is the liquidity? Because price is like a magnet to those zones. Next time you see that big breakout candle, don't chase it. Stop and ask yourself, am I the shark here or the bait? And trust me, being the bait sucks.